And we are live. I'll let our host connections get all set up. Going live on Facebook, YouTube. Is our Facebook connected? I see our YouTube. If anyone's on Facebook, let me know that you can see us and hear us. Welcome in, everyone. There we go. Looks like our viewers are coming in. Yeah, anyone on Facebook, if you can see or hear me, please let me know. Make sure that's working. YouTube, hello. How are you guys? We are excited to be here for another Thursday edition, 10 a.m. Central Standard, like we are every Thursday at 10 a.m. Central Standard on YouTube and Facebook for our live show here. Today with me is Joe, founder of Micro Moment, and I imagine you as kind of the guy up top at the horse races, kind of like the announcer, but like also like knows what's going on.
You know? Oh, absolutely. That's right.
Absolutely. Yeah. Tim, our resident MMT coach. How are you doing?
It's called a know-it-all.
Know-it-all.
Know-it-all, yeah.
Okay. Joe, our resident know-it-all. He said me. Tim, our MMT coach, which is our narrow focus trading. It's very not narrow focus, but narrow time frame trading. Very quick trades under a minute. How did that go today, Tim?
It was a good slow day. We got a couple of winners. Joe, how did we do today?
Well, we did good as far as returns go, 9.9033%. And it was just you there today because Mark's had an emergency trip to New York. He'll be back in the morning. For the week, Monday, Tuesday, Wednesday, and today, and that trading is 64.4619%, which is astronomical. So we have a good chance. We could, if we, with both of y'all here tomorrow, we could get over 100. In which case, we've averaged way over 100. Like I think last week was 120 something %. And some days fantastic, and some days just 4 or 5%. But it's really, really, really good returns.
Nice.
It just always makes me laugh. It was an okay day. We did 9% return.
Yeah. Yeah, because remember, mutual funds, on average, mutual funds make slightly more than 5% a year. And we've all been trying to figure out what those guys sit around and do all day.
I don't know. It's a complete mystery to me, Joe.
I mean, you had 2 trades. One even. You had 3 trades. One of them was even, but one of them you were plus 4.3478. The other 5.555. And that's a year's worth. You ought to go to work for a mutual fund. You can make all kinds of money and only be there for 1 hour a year.
We just have to work one day and earn all this money.
Yeah, I don't think I could learn to lose like that. I don't know.
Actually, we didn't tell y'all, but I think we need to tell you now that Tim and we have actually contracted you out for our own account, the mutual funds, and we give you trades.
Okay.
And they pay astronomical amounts of money for your services.
Cool.
Yeah.
As long as I can use the charts, that's.
I wrote the editorial. We always do the editorial on the weekend, and we do the live broadcast. And I wrote the one because I'd gotten this article on Fidelity, and it was just mind-bending what the editorial was about. Fidelity launches brokerage account aimed at 13 to 17-year-olds. And I think I had one of the most blasting editorials I've ever done. It's the dumbest thing on the face of the earth. Number one, they don't know anything about that. They're just trying to lock people in like it's almost like a prison sentence. They get them in there and get the account. They don't do anything. They don't have anybody teaching these kids. The kids are supposed to learn to trade, but they're supposed to learn from their parents. And the reason they got to learn from their parents is because they can't participate in this program where they get an account with some breaks on commissions and costs and stuff like that. They claim no commissions and stuff. But
so let's actually brought the page up here. Let's define our terms a little bit. So it looks like a Fidelity youth account.
Youth account, yes.
Yeah, where teens 13, just so that viewers have some context, where teens 13 to 17 can learn to spend, save, and invest.
Absolutely.
They will get a free debit card with no account. Also, a free debit card. I didn't realize that with no account fees.
That's really good.
Or a minimum. So it's a debit card out of a trading account where you can trade stocks and ETFs and Fidelity mutual funds. Interesting. I didn't see that.
Yep.
I wonder if I can share my screen here.
Yeah. What could go wrong with that?
Yeah, really. Yeah, get them hooked on that credit card right away. It's not a credit card; it's a debit card. But
Yeah.
they won't know the difference because they just use it and it's money.
Right.
All it is just they're just trying to lock in some accounts. They think there's some parents will come in there, open an account who's never had an account with them just to do this, but they'll realize that the parent doesn't realize he's going to have to teach his kid, who's this 13-year-old who's not interested in this on the face of the earth. You think he's going to watch? You think he's going to watch the NBC? Are you kidding me? A 13-year-old? 13-year-olds are interested in girls. If it's a girl, it's interested in boys, and if it's a boy, it's interested in girls. And so is 17-year-olds. 17 wants to be out there in a car. They're not going to sit there and do the. I'm talking about traditional stuff now, the traditional trading stuff like Fidelity would do it, but Fidelity's not even doing it. They don't, they're putting it off on the moms and dads and saying trade these kids' account and have them go listen to all this stuff like on CNBC, which is just ludicrous. There's no kid on the face of the earth that's going to do that.
Yeah.
Besides that, our program, Micro Moment, I'm put a plug in here for that because that's designed for kids. Because look at Tim. I mean, it's absolutely designed.
Oh, what a roast!
Because it's fast. It's fast. It's extremely profitable. They don't have to spend anything on learning about stocks appreciating or learning about all that myriad of stuff they talk about on CNBC. They don't like it, so they're not going to be bored to death. It's a video game. It's a video game. That Micro Moment trading has one move. You enter it and then you sell it, and that's it. In 15, 16-second trades, these kids are done. And they can go out and drive around dad's car and go call the girlfriends or whatever they're going to do, boyfriends or whatever. Kids that age are not going to sit there and become traders. They're just not going to do it. They don't want to do it. But our Micro Moment, they can make a fortune. Micro Moment, because it's a video game. And they're good at video. What are kids really good at that age? 13 years old, 14, they're really good at video games. And we have a chart. And when they learn from our guys, Tim and Mark, they learn how to interpret that chart. And it's easier than I'm sure some video games. It's got to be easier than video. And so they know exactly when to enter a trade. They don't have to worry about picking out a stock. They've got the index, or I'm going to trade an index, QQQ. Apple, treat it like an index because of the nature of the company. And that's all we're going to trade. They're not going to learn to do something that's going to be totally waste their time, and they have no aptitude, nor do they want to do it. Learn about stocks and, hey, why is this company worth more than this company? They're not going to do that. If you really want to teach them how to make money, do the Micro Moment trading where they turn virtual money. Oh, in this article, they talk about how, well, it's a possibility they'll lose money. And so you got to really, watch them so they don't lose. Hey, you're not good. Ours is live trading virtual account. It's like the real thing. And they're going to learn that, and then they're going to do it. And they go prove themselves they can do it because the virtual account, if their virtual account goes to zero and stays there, then they shouldn't mess with it. Mm-hmm. Okay, now I've got to take a breath. Somebody else want to make a comment?
No, I was going to say, Joe, if you have an opinion about this, share it, please.
Yeah, really.
Yeah.
Really.
Well, no,
there's one extremely limiting factor. This account doesn't seem to do any sort of options.
Mm-hmm.
Not yet. They're just basically buy and sell stocks.
So
yeah,
on the charts, it would be. I mean, we could buy the stock and sell the stock, right?
Yeah.
But we do it for that leverage. So I think if it was to be done in an account like this, especially the Micro Moment, the short term stuff, it would be a very gradual sort of transition because, I mean, Tim, the actual stock move would be, I mean, if you're rocking a 50 delta on an option, you're moving 10, well, probably anywhere from 10 to 30 cents on the actual stock price.
Mm-hmm.
Yeah.
Yeah.
So, they're not going to get it. Again, this is a video game, and it's not a lifetime deal because they're going to make enough money at that $1,000 virtual money. If real in 2 years can turn to $850,000. They're going to move their parents into their basement, they're in their house, and they're going to pay for college and probably everybody else's college education at the same time. That's what parents have to look at. This is something versus this stupid thing with fidelity and what do you got a kid now? You don't even like your kid in the first place. Much less hanging around all day, screwing up the computer. I mean, it's just
you don't like your kid, Joe.
Our micro moment. It's a computer game. They can do it, and then all of a sudden, they got lots of money, and they've got something they do the rest of their lives. Not stupid,
Yeah, I know, and I take my my objection really to this is they're learning to accept lower returns, right? It's like they're training the next generation to accept 3 and 4% a year return, and think that is normal. Which, well, I guess it is in the industry, but still, that's what this really feels like. Is that they're training the next generation to accept small returns.
I think there's quite a few. I don't know. I think there's quite a few dangers, like mentally, with the understanding of the money being a younger person. Like, I'm not sure it's there's. I would agree with you, Tim. There's a certain amount of perception that I think. I mean, ultimately, parents are responsible for the perception of money, but it's just in like we know the broker doesn't always have your best interest in mind. That's like my main concern. The conversation last week on PDT, it was very clear, the money they were trying to protect through PDT when they made it back in 2001, and it's obvious the motivations for those rules was some tragic events that happened that year and things like that, and they were building safeguards for them, and they continue to. Now, to say that you can't benefit learning about the markets as a younger person now, I will say is a totally different thing. I think any amount of education, because a lot of high schools you don't learn to balance a checkbook, so I think there's a severe lack of financial education on purpose in the public education system, and I think there is, I don't know, I think it will make up for some of that, just sheerly education and learning what it is ahead of time, but it's concerning in other ways.
Mike, here's the big drawback is Fidelity doesn't have like a dedicated group of traders that are trained to deal with kids like this and teach them something.
Yeah.
They're depending on the parents, and the parents aren't any good at trading. Call Merrill Lynch and ask, hey, you got all the computers in the world. What is your average trader that trades on account day? They won't tell you. You know why they won't tell you? If they made anything, they'd tell you. They won't tell you because, their clients are as dumb as their brokers are. And they're not going to tell you anything like that. In the same way with Fidelity. None of them going to tell you what their individual clients make because they don't make anything. CBO will tell you what they make. They lose 80% of their money. And that's hard to believe. But it's absolutely true. So you got the insane in the house trading the insane young kids that are like crazy and know how to trade.
Yeah. I mean it's I think stems from a lack of financial education from a long time, or even a misrepresentation. Like, I think not only are we not taught a lot of things about the financial world around us, but we're taught a lot of things that aren't necessarily true. I think a lot of the financial education is realizing all the stuff that, wow, it doesn't actually work that way. That's not why.
Well,
What?
Yeah.
How does credit work? Why is credit built that way? That's kind of odd, and you start to realize some things about that.
And you're talking to a 13-year-old. Give me a break. Of 13. That kid is bet. I bet I couldn't play a video game, but they can. And that chart that Tim teaches is a video game as far as they're concerned, and it's got only one rule. It's not Randy's that has a book, that weighs 500 pounds and got all kinds of rules in it. It's just one rule. When it's a video, you got red and green lights, and when that green light turns red, close that sucker out. He can look, and he's probably faster than Tim for sure. But Tim, and Randy's hands are shaking. He hardly handle the mouses, It's just now. Let me say this.
First of all, Randy, what's your opinion on this generally?
Well, first, I mean, I agree with what's being said. First off, does Fidelity even have like virtual trading that these kids can start practicing without actually using real money? Because if they don't have a clue what to do, and then their parents aren't really that good, and they start off with real money, good chance that they're just going to lose it, because they need to know how to do some technical analysis, look at some charts, pick out the appropriate stock to buy, just not, what's the latest fad, because it's for them, since they can only buy and sell stocks, it's going to be more of a buy and hold for a while. So you want to have a good solid company, or the S&P, the SPY ETF that you just buy and hold on forever. But they really need to have some kind of education, and it doesn't sound like that Fidelity is set up to provide education to them.
Hey, Randy, you just got a note here. Peter says that they can't hear you. I can hear you fine. You look talking a little light. You might talk a little louder or something.
Let me see if
See if you can turn it up a little bit, Randy.
Let me say one thing. Fidelity's been around a long time. We've been around a long time. We have actually taught kids how to do this. We have this master's class coming up in July. We're going to have a date on it on Friday. And Micah's going to be there. All these guys are going to be there. I'm going to be there. And we're going to have, for the first time, a presentation done by somebody that's been doing this with us since he was probably 7 years old. Now he's 21.
Was that Micah?
No, Micah's not 21. This guy's 21. And he started with us. It's Dirk's son. He started with us.
Oh, cool.
We used to sit down at the Chop House Bar and Grill and have lunch every day, and he'd come during the summertime. He wasn't in school out here. So second, third, fourth grade. He'd get him a martini glass, and give him a martini glass like mine, but they wouldn't put a martini in there. They'd put something that looked like a martini in there. And in the course of those years, pretty soon he was straight. And now he can make an entire living doing that. He's only 21. And Dirk's other son, who's only, 5 or 6, his account is at 40%. Now, he's not going to be talking there. But so we're going to have. We used to give a scholarship. We used to give an amount every month back when we could do these seminars out around all over the country. We would have people bring their 10 years or older kids to that session, and we would draw out of a hat at the end of the session those kids' names, and we gave away $5,000 each time, and that was for the kid to tell you.
Nice.
That's
Nice.
Now, do I realistically think they did? No, I don't think they did, but it was at least it was a thought that maybe they would. Because I think in a lot of cases the parents were so damn greedy they took the $5,000 and did something with
it.
Right, kid's only 10 years old. What else he going to say?
Yeah.
But no, so we've got a lot more experience with teaching kids things, and we have the proof, and we have them, and that's why I'm always so emphatic about this. And I think every single micro moment session we do, every single morning I mention that about getting your kids to do this. It solves all kinds of problems.
Yeah.
So, yeah.
Yeah. Can you hear me better now?
Yep.
Yeah.
Yes.
Yeah. The learning as early as you can how to handle your own money and how to make your money work for you to generate income is outstanding. I mean, I didn't learn all this stuff about covered calls till 2006. So I was in my 50s already. If I would have learned how to do it back in my 20s, I would have had 30 more years of generating income and building up that portfolio so that I could have retired even earlier, or even better yet, selecting a career that you want to have because you like it, as opposed to one that you want to have because you got to earn enough money with it. Um, it gives the flexibility and the financial security.
It'd be one thing if they had seminars, they were teaching these kids stuff, but they're putting on the parents, and the parents are going to want to do this. But parents out there doing all kinds of stuff. Comes home, the kid wants to talk about CNBC, and finds out that there's some late movie on CNBC. I don't know. It just, totally.
I think one of the big differences is what we do is we teach financial empowerment, and you've all mentioned this. This idea that you can control your own destiny, your own financial destiny, with a simple, straightforward technique. And if you don't like the speed at which we work on MMT, you can go with the other side of the house with Randy. And that's the big thing is we're giving you empowerment. We're giving you the tools in which to guide your own financial future. And I think when you experience that, you get this idea that, oh, wow, it's not really stacked against me. Well, it is if I'm following their rules, but if I'm doing this, I have control and I can do it. And, one of the biggest fears in America is the fear of financial insecurity, and we're in a generation where a lot of people have no money saved for retirement. And worse yet, they're scared to get it, right? They're scared to get knowledge and take on their own financial decisions for themselves. I think that's one of the biggest crimes in America is this idea that you have to depend on a broker and a brokerage firm to make all the decisions for you. You're giving away all the power. With what we do, we're giving you the power back. And I can't imagine a better gift to give to, a younger person than the confidence to make their own financial decisions. That's huge. And we do that. And we do that successfully here.
Well, also on this master's class we're going to be doing in July, the kids can come free. So bring your kid. You just can't drink, but just bring him. And because the parents have enough invested in that kid. Everybody wants a kid to go to college. Okay, I personally think it's a waste of time, but and when the parents see how simple this is, and this kid could really have a lot of fun with it because it's a video game, and he can say, "Hey, I'm going to let this kid run with this," and just try it. And I'll help him when I can. I'll try to learn it myself. Blah blah blah.
Yeah.
And I don't know. I think it's probably heading in that direction more. I've been looking at the markets for a while now, right? And seeing them from, if somebody was say 17 looking at them right now. When I was 17 looking at the markets, I was looking at Apple. And it would have some, some few dollar days down in the hundreds, and it was pretty exciting, when it would go to split and when there would be a call, but like it doesn't move the same as it did, when I was 17, and I'm only 23. Like I'm not old by any means, but like the amount of sheer moment to moment change is not even. I mean, there was some big runs, but I was even researching penny stocks when I was like 18, and there were some penny stocks that I thought were incredible, just incredible runs because they would go from 5 to 15, and now we have stuff just casually going from a few cents to dollars, and all these this magnitude is getting so much more increased. I think it will be interesting how the kids take it and run with it too, because like the parents do have to teach them, right? But the parents don't necessarily know. And then we're changing at a speed that I talk about every week. The dynamic of the market is changing so intensely, and the moves are getting so much more intense. They're stepping into a new market that they kind of have to make and navigate a level of volatility that the world has ever seen. And I think we'll come out of that a little bit as everything from COVID settles down. But I think we're in a new area, and so that is one of the plus sides. I think is these people are going to be able to kind of redefine it for themselves in their age.
And don't forget, Mike, you got firms like Robinhood. Now they're catered to try to cater to young people. Obviously, they're doing a good job because you got a lot of young people. Now, maybe they don't want to do it. You may lose a lot of money, but at least it's appropriate from the outwardly admits trying to cater, and they're being very successful at catering people. I don't know how successful the clients are. Maybe some bricks. Who knows? But I doubt it. So the market is trying to cater more to the younger people. There's not a better opportunity to learn stuff.
Sorry, you're kind of echoing.
Yeah.
Oh, you hear that too? Okay.
Yeah.
Yeah, no, I totally see what you're saying. We got one from Peter here. Hello, guys. I want to make the transition from what I'm doing now to MMT trading for a living. I'm self-employed and have 8 kids. I hate to omit this unnervous on the transition. Yeah.
Wow, 8 kids. That's
Wow.
my hats off to them.
Yeah.
He's got his own brokerage company.
I come from a family of 6 brothers and sisters, so I know what a big family is. But 8 is a lot.
I'm the youngest of 7, actually.
There we go.
Wow.
I bet you get a lot of advice.
It was fun growing up, though. Lots of people to have fun with.
Yeah.
Yeah, absolutely. But yeah, I imagine it would transition from it would make the transition difficult. And that's what we honestly say about the market is we don't expect anybody to quit their job and start day one and try to figure it all out. We don't ever want anybody to over push themselves, because if you're patient enough, the compounding will take care of itself. Your rate of acceleration, should it work, is fine. You don't have to worry about that, right? But it's about setting up those foundations and giving yourself the time to make sure that you know what buttons to press on the screen. That's why we recommend the paper trading accounts and taking the steps in order. When we talk to MMT clients, when people are first starting, we don't say go from 0 to 50 contracts. Just jump right into $5,000 trades so that it's worth the trade, right? A few years ago, options restructured in a really key way, and those commissions went from a per trade basis to a per option basis.
Mm-hmm.
What that did is really took off the minimum size required to trade. And I mean, you see that in everywhere. We're getting fractional shares of everything now. We're getting micro mini ETFs. We're getting fractional coin shares on crypto, all these things. And I think that, it's for the brokers to be able to take smaller slices of money from everybody. But I think you can use that at the same time to really gradually work into whatever level you need to be. I think we all come from a very different place, and we are all entering the market in a different place from our experience. And so I would say, yeah, do whatever you need to do to make that transition smooth. And it can be a supplemental thing, because especially if you're talking about MMT directly, it can be such a supplemental thing. Brian, one of our graduates, I remember, he was on for 30 minutes a day. Oh, Tim did this kind of too. About halfway through the session every day, 30 minutes into the day, he would say, "Hey, I'm going to the beach," And yeah, so we saw him for 30 minutes in the morning, and that was it. So I would transition as you need to.
Because of this session we're having here just dawned on me. We very well we have enough people. We have been teaching these kids, one way or another for a very long time. We could end up with maybe taking this 21-year-old and have him start doing seminars just for teenagers.
Right.
Yeah,
Right.
because they would listen to him. He's obviously good, and has never done any other techniques except our stuff.
Right.
So maybe we can just do that.
I think that may be a good idea too, because I think in a market that has changed, you'd need someone closer to that age to really be relatable, I think.
Yeah.
Yeah.
Versus a bunch of stuffy old guys at mutual fund company.
Mm-hmm.
So
Yeah.
That's very valid.
Yeah. No, I think there's some merit in that. Having a teenager talking to his own peer group.
Mm-hmm.
Yeah, and I think the younger kids probably will understand it even better than their old parents.
Yes. Well, they'll certainly know how to handle the hardware.
No, you're right, Randy. Here's why you're right. Their old parents have made every mistake on the face of earth, and they still do. And so you're trying to teach a kid how to do this without all that old stuff that never has worked in the first place. And that's why that nobody hardly has any money to retire. Vast majority of people don't. It's because the stuff never worked in the first place. So now you're trying to teach a kid that. Give me a break. It needs to be like some kind of communist year where you take the kid and you wait for his parents. You put them over here in trading field,
Mm-hmm.
Parents, because they're not going to be any good. They sit around and say dumb things.
Mm-hmm.
It'll be forced separation. Maybe we get a government program.
At this time, I can open the floor if anybody has any comments or questions, even unrelated. If you have a question on what SPY looked like today, feel free to drop it in. We'll be able to see that and answer those. But yeah, thank you all for talking about this. I think it's very relevant in a lot of ways, and it's going to be interesting to see these transitions and how they play out in the accounts. I think on one plus side, I think it will be a little bit more relevant than as these things develop. I think it will be a little bit more relevant than paper trading, because when I was the video game thing, Joe, is a pro and a con. When I was under 18, I was paper trading, and I remember a couple times I started to get a little bit ahead of myself. What that looked like was like, I think I had 1 month where I just swung for the fences on everything. I understood the markets a little bit more, and then I realized how it was a good thing. But in I think like a month and a half or something, I took an account from a paper account, mind you, from like 100. They start you off with $100,000. I think it took it to like $325,000 in a month when I was 17. Now, had I been in charge of that type of money, there are trades that I would have never done. There are things that I left overnight that I would have never done. I knew it was ridiculous risk to reward, but it's fake money. And if it works out, sick. And if it doesn't, it's fake money. So yeah. I think we need to be careful about really careful about the habits we interact with when paper trading. And because it's still going to be real money in a very limited risk situation, I think that could be better.
Michael, that's the exact point, though. That is going to happen. And you just have to expect that. That's why, though, if you got those basics, they can fall back on. Number one, you got your virtual account. Now, it wasn't.
That's totally fair. But when I was 19, I didn't have $100,000 to put in an account.
But a long time ago, older than you, they didn't even have virtual accounts.
Yeah.
So when we started teaching compound stock earnings, covered calls, we had to tell people don't put more than 2% of your money, you got $10,000, only start off with a couple. We had to tell them that because there was no virtual trading.
Yeah.
So that's one of the things that has come along that makes it possible for younger people, particularly teenagers, to learn this because they're not going to be afraid. Their parents are going to be afraid they won't have to lose money. Or to go out there and let them make every mistake on the face of the earth and learn like you did. You know.
That's fair.
And so I don't even think that's something to be concerned about. Now, overall fidelity it is because they're playing with real money, and they mentioned that in that article. You got to watch it. Your parents got to watch it. But they don't.
Yeah, I'm saying that may be a benefit because it's not as depersonalized. Yeah, I think trading paper trading is great for learning the technique, learning your different platform things, but I think it can create some bad habits if done for too long, which if you're talking about 13, 14-year-olds, they're going to be paper trading for 5 years.
Yeah.
Before they, otherwise, before they have a ability to do an account, and you're going to build some habits in that time.
You're starting off, they don't have to learn about, all about stocks and appreciation and all the various, they don't do all that. They can just start off now, and let them learn all that stuff. But they learn something, mainly our micro, which is easy for them to do and turns profitable. And it's going to be good for their parents and everybody percent. So.
Quick question from Daryl here. Randy, how has your trading week done?
Oh, it's going great. This morning I did a lot of management and generated a lot more income. And I also actually closed out a position that was deep in the money and getting ready for tomorrow. And so far, all the positions are in the money as well. So market goes up and down, and you got to learn how to benefit from that market going up and down, because that's what it's going to do. And selection of positions, that's why I talked about it's critical, someone that's young, that they don't just go out and they hear something on TV and they go invest in it. They need to be able to select the good quality companies that are going to work in good times and bad times, that they have a solid customer base, they have solid revenues, they have solid profits. It's not based on expectation that in 5 years from now they'll make a profit. So you got to learn how to select those good quality companies to start with.
Yeah.
And when you do that, and with me and the synthetic covered calls that are just a weekly basis, then the percentage is extremely high that they just get called out in the first week. And even though we have the management process that says if it doesn't get called out, here's how you keep generating income. I don't like to use it until I have to, and I would rather just get called out every week. And the percentages are in the 90%, in the above 90% range. That it's just called out in the first week. So,
but see, Randy, those kids aren't going to do that. What you're talking about is what they're not going to do. They're not going to be in learning all that stuff initially. It's better for them to just learn to do something. They can try to make some money.
Yeah. Start off by learning how to buy low and sell high. That's what they need to start with.
There you go.
And learn how to actually do that,
Right.
and practice for a while before using real money. The same thing with Peter when he said he wants to try to transition over to just doing micro moment trading. Do it virtually to start with, and then do it with real money after that, and make sure that you're successful week after week after week, before transitioning over. And that's what I did years ago. Is I'm still working full time and doing the cover calls in the evening. And after I felt, yep, I think I got this. This looks like I can generate my income. Then that's when I felt comfortable with switching over. So everyone's going to be different, but you need to make sure that you know what you're doing and you're successful before jumping ship.
Well, and it's a huge thing to clarify, Randy. Sorry, Joe, really quickly, because we are not going to give you we're not after hot picks. We're not after anything. We're about teaching systems, and that's it. If the system doesn't work for you, then you should know that within that transitionary period, and you know how it will be continuing forward. But it's not like, well, if this little sector of the market dries up, then you're not going to have anything too. I think that'd be something to be very aware of, Peter, is looking at all the different techniques. I know you're a smart guy and you're looking at multiple techniques. Just be aware of what happens when the market changes dynamically, because it will. Yeah.
That's why we started on micromoment with QQQ and Apple. The stocks aren't going to disappear or go away.
Yeah, because it's Apple and QQQ. Yeah.
Because they don't know why we're starting off with Apple and QQQ, other than we say, we couldn't use this one because they're going to go away. And they'll say, what does that mean? You don't need to worry about that day. 17. I'll ask you that question. You don't talk to them right now. Just do what I say.
Yeah, absolutely. Fantastic. Well, hey, I appreciate everyone being here today. We have something really big coming up next month. I cannot really even give a hint about it, but we are pioneering some new territory for ourselves, new exploration within Micromoment. So we got some really exciting
you have to be biased to participate. You can't be a 17, 18 who's too damn stupid. You got to be at least 75 or 80 to participate, right?
What did I miss? 75 or 80 years old?
Oh, yeah.
Yeah, so big things coming up next month. Really excited for that. We have made, if there are any pre-existing Micromoment clients on here as well. This isn't so much a plug. TikTok kind of has. I do all the social media for everyone's context here. TikTok is a platform that takes care of itself. Just speaking plainly with you as somebody even trying to grow a platform, TikTok is very self-enclosed. It's its own little ecosystem. You can say, hey, we're on Facebook, find us on Instagram too. It's not like that. But anybody that is on Micromoment already, use TikTok as a resource. Use it as a personal library. We send you guys archives every week. We send you, and you can go back and watch those MMT 1 hour archives. But I go into those things and I pull out the individual trades. And for you guys that actually know the charts, you see it in real time. You see the actual setup. It's not watching for an hour and seeing it flow all together, right? That's very important to learn. But it slows down. I bring it right into when that pinch happens, right when those Bollinger Bands are headed towards each other. And those of you that know, I have those moments in there. And Micromoment is perfect for TikTok because it's sub 1 minute. So if you guys are on Micromoment, please use that as a resource. It's free, and there are daily additions to there of the individual trade setup. If you're wondering, a little bit more detail on M3, how do I know the timing of M3? Should I cross after it crosses M2 or before? If you have any specific questions like that, go in and look at the setups. There's 50 to 60 posted right now that you can go in and look at those individual trades and then see how they play out. I add some losses on there intentionally, how we handle those, how we recover from them. So if you're a Micromoment trader, it will only help you, and that's.
I think those TikTok things look great because it reduces down, because we're on there all morning and you're getting set, and there it is.
Yeah.
In the chart, and they see whoever, Mark or Tim, and they see, they explain just that one trade, that's it. They've really, that's really good.
Yeah.
And Randy, I told that session this morning that you were burning them up over there. And, Randy, good Lord, again, 10, 12, 15 trades when I last looked.
Yeah.
Just let them know that you were burning up, but Tim was only doing 4 trades,
That's taking advantage of the market and improving your positions.
That's right.
Yeah, absolutely. Okay. Awesome, guys. Any comments on this upcoming week? I'd like to do a little new section at the end here where we kind of and I haven't told you guys, so everyone that's watching, they're all on the spot right now. But I'd like to add a little portion of a forward looking. So coming into the next week, obviously we're not financial advisors. We can't give direct advice as to what you should do. But what are some things, anything to watch out for specifically coming up this next week? Any sort of heavy influences in the market that you guys see coming? And we'll start with Tim.
Sure. Something that we're looking for are unemployment claims.
Okay.
They tend to affect the market short term. Any Fed announcements coming up? None that I know of. Longer term, Apple has been in a bit of a sell-off, and we kind of expect that to continue.
Yeah. Randy, what do you think of the anything from you, and then the overall kind of vertical with these severe downtrends we've been seeing? I mean, overall all-time highs in general, but then these rapid.
Yeah, well, I mean, right now there's so much cash out there hanging around, trillions of dollars, that anytime there's a little dip, they just rush in and buy, and that's what's propping the market up right now.
Yeah.
Because otherwise it would be going into a correction. So at some point, whenever that money quits jumping in, it's going to go down. So there will be a time sometime this year that it's going to go down. So that's why, for me particularly, I'm being as conservative as possible, and I'm trying to be in and out during the week and not have anything go multiple weeks, so that I can take advantage of changes from week to week. And in some positions like SPY and QQQ, I'm only in for a day. So I'm in one day, out the next day, so that I can readjust with whatever the market is doing. And then also get in on a down moment, get in on a down day, and then you can get out on an up day. So those are some critical things that, everyone says, oh yeah, that makes sense, but you got to make sure that you do. Don't be getting in on the hype and, oh man, it's up, I got to get buying right now because it's up 400 points. It's like, that's what they want you to do. Don't do that. You got to be disciplined and enter at a low point on the chart, and make sure it's a good rising cycle for the equity. So those are, just follow those basics, and we teach those in every single one of the techniques that we use. Those are some of the basics that you need to learn. Stick to those basics, and then you should be okay.
Yeah. Let me just follow on that. Great point. Follow the rules. Right now, I mean, more than ever, right now, is just really pay attention to the rules. Now it's not a time to be experimenting.
It's too easy to get caught up in the market only goes up. So there's lots of traders out there that just started trading last year with the COVID. They're at home doing without anything to do. They decided they started trading, and all they've seen since last March is the market go up.
Right.
That's not what it does forever. It goes up and down. So
Don't
rely on that it's going to hit another all-time high next week. It's going to be going up and down, and at some point it's going to go down for a few days or a week or two. And overall, it goes up over a long period of time. But don't get caught, thinking, oh, I can do anything because it's just going to go up.
Yep. And I will preemptively say something for any sort of, overall shift to the downside, because, I mean, we're not talking conspiracy theory or crash, that will happen whenever it does. And we can't really predict the day that's going to happen. But just as, people say, buy high, buy the breakout, because they want that perpetuation of the upside. I've seen periods where it is just as loud about shorting, but there's something very, very quick that I want to explain about shorting. If you buy something at $1 and it goes up to $2, there's your 100%, right? That's great. It can go up right? Upside is unlimited. If you're looking to the downside and things start to head down and people start yelling at you, oh, short stuff. You can even use margin, all this stuff, right? It's all fun and games. But when you go down, you can go down from $1 to 0 cents, and that's it. There's your 100% loss, right? $1 to $2. But if it goes to 3, that's a big problem. If it goes to 4, that's a big problem. So what I want you to understand is make sure you have a ground underneath you. With shorting, there's a lot of different situations with shorting and margin that you can lose more than you have invested, right? There are ways that you can play the downside of the market, like with put options that don't subject you to that. But if whenever we start going into an overall downtrend, just because how loud everyone is right now about, oh, buy the upside, buy the upside, buy the upside, I would just recommend being careful when people start to yell, oh, you can short this and make so much money. Be really careful about and know what your maximum risk is when those situations start to occur as well.
And I just want to reemphasize on what you said, Micah. Don't trade on margin.
Yeah.
Do not borrow money because you're getting behind and you say, yeah, but it's gone down, I want to buy more, and you go borrow money, and then you borrow money. The first people that are going to get their money back are the ones you borrowed it from, and you're going to lose.
That's right.
And that's how a lot of the hedge funds, the way that they really generate their returns is they're leveraging, they're borrowing against the money they have, and they're gambling on that. Just don't do that. That's the fastest way to lose your money is by borrowing, because you're going to lose more than you actually have. And that's where you're going to really get into trouble. So just don't trade on margin. Don't borrow any money. Don't mortgage your house. Don't get a loan on your car. Just don't do that. Only trade with money that you actually have, and know there's risk in the market. So just know that and be very, very careful on that.
And it does nothing but make your trading better anyways too. You have to manage the mental side of what money you're trading with, and it's going to be on your mind when you're trading it. So yeah, give yourself that room to breathe a little bit. Joe, anything to watch out for next week?
No, we don't watch out for anything. Randy doesn't. Tim doesn't. All the stuff you were talking about, I don't know why you're talking about that stuff. Doesn't apply to us. We don't care if the market's up or down on the microphone. Randy is going to get into situations where the market turns, like you mentioned, the market can turn on you. That's making a difference to Randy. He's going to make money when the stock goes down. So forget about all that crap. Just follow the rules. His technique, follow the rule. The one rule over here, micro moment. We don't care what the market's going to do. We don't care what it's going to do 16 seconds after we get into a trade, because we're out of it. We're back to cash. So we don't care. We don't care about the market. And all these people, like you don't seem to be seeing people like that. This crap nobody can control or even think about. And we don't care about it. There's nothing. That's why I have nothing to say. Nothing tomorrow or next week would be bad for us, because we don't care. Randy doesn't really care. He's trying to be philosophical, then be mature. It's old age, but he doesn't care. He knows he has rules. He goes in to open a transaction. It can be a bad market, a good market. It doesn't make any difference if the rules are the same.
Just looking for
if he gets in and he doesn't get out because the stock goes up, it goes down, and you get out when it goes down.
And then that's a critical thing. None of our techniques are speculation.
Yeah.
So the great one is to do what Tim does. You're in and out in less than a minute. You're back to cash. It doesn't matter what happens to the market going on. With the covered calls, I'm deep in the money covered calls. The stock can go up, I get called out. It can go sideways, I get called out. It could go down, I get called out. So I have a cushion that the market can move in, and whether it goes up or down, it doesn't make any difference. So that.
And what happens if Randy can never get out? That's beautiful too, because he's just generating cash income, and it doesn't take many months. He didn't have any money in the stock, so he's totally has no basis in the stock whatsoever.
No, that's true. Free stocks. That's a whole nother conversation.
There you go.
That's another day.
Yeah, exactly. All righty, guys. Well, thank you so much. About at our hour here. We will see you guys next week at
Okay,
10
Mike.
a.m. same exact time, and we might have some more announcements on that,
Okay.
on those developments by then.
Hope everyone has a great weekend. Monday the market's closed, so Tim won't have anything to do on Monday. So
Yeah, you guys get a long weekend day off.
yeah, be up there barbecuing, flipping those dogs and burgers.
Yeah. Yep.
That's right.
Yeah.
Randy,
Everyone have a great Memorial Day too. Yeah.
are you playing this weekend, Randy?
Nope, I'm going up to North Carolina. My daughter's birthday is tomorrow, so we're going to go up and spend the weekend with her. So
Nice. Very nice.
And to add intrigue to Randy's game occupation there, the big one of the best baseball players in Cuba defected this last couple of days. He was up here playing for Cuba down in Florida, and he I guess ran screaming out of his hotel room and ran over to the U.S. Embassy or something like that. But yeah,
good for him.
Yeah, and again, a big thank you to our service members.
Yep, absolutely.
Absolutely. Yep. They're the ones that provide us the opportunity to do what we're doing.
Yep.
Wouldn't be able to do that if they aren't protecting us out there and keeping our freedoms for us.
Absolutely. So, all right, gentlemen.
Mike, thanks.
I will see you next week.
Take care.
See you later, guys. Thank you.
Okay.
Goodbye.